This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to the channel. So today I want to talk about how I use trend and momentum to identify the tradable trend. And the fact of the matter is that I think a lot of people don't realize is that if you trade the same time frame always, so if you're always entering off of a daily chart, you're going to go through periods where the setups are going to run dry, and you might not realize it, and you might end up forcing trades. So I think it's better, at least the way I found what works for me, is I have all four time frames up: monthly, weekly, daily, and hourly, as I'll show you in a second. And then I try and find out which time frame is really in control and which time frame is trending. And I'm going to show you the few things that I look at that I think can be useful. I'm also going to mention, or at least spend a minute on, stop placement for a trade. Okay, let's go ahead and get into this. So I've got my four timeframes up on CF Industries. Been a really good performer, agricultural chemical. So I've got my monthly down here. And if you notice, in fact, let's pop this open, because look at what's really interesting to me is that this hasn't had any real tradable opportunities, at least after it started trending. Because we had the breakout play. You could draw in your trend line here and see that it broke out, came back and tested the trend line, then it had a really nice green bar to the upside and basically just took off and has never come back and tested the 18 months since that time. We have really good momentum characteristics and everything. But for me, the tradable trend is something that is going to give you the opportunity to come back, at least a few times to test the 18 on that time frame. And if you notice, since this broke out, it's never touched the 18 or really tested it since then again. So I think you want to take into account not only how strong the move is and how good the momentum characteristics are, but its relationship to the 18 MA. If we go to the weekly chart, notice what happened. Once it broke out, it did give us a couple of opportunities. We had a pullback play here with a nice pinch set up here. Look at how strong the ADX is here. And then we got another opportunity right in this zone with another pinch after MACD confirmed and ADX confirmed. So we had two good opportunities on pullbacks to play for a subsequent move. Now, I don't really consider this to be a tradable opportunity. You see this quick, fast decline that came back and tested the 18-week. I don't really, so yeah, it was a pullback, it was quick, and it ended up turning to the upside, but I don't think that was actually a tradable chance, at least not on this time frame. So we had a couple of good opportunities, but now notice what's happened. We've jetted away from the 18, and we haven't had an opportunity where we've come back and tested that line. So I don't really think this time frame is the tradable trend anymore, while it was during this phase. So you want to think about it like this. So this was a pretty good period for this based on all these conditions that were in place. The only problem I've got with this now is that we're not getting the opportunities near the 18. Now, one of the things that can make this easy to see is watching this 18 and 40. And if they look like they're moving up at about the same rate and we're getting regular pullbacks, then we know we have a pretty good tradable trend on that time frame. So notice what we look at on the daily chart, and notice how we had a couple of pullbacks. Now, this was really sharp, this second one. You see how violent that was? And then it did end up going to a new high after that. This was also a pullback that had some noise to it as well. But both of those would still qualify to me. We made a new high in price relative to the prior peak. This was also a new high in price relative to the prior peak, but we had confirmation on a MACD ADX basis, and this is still confirmation from my standpoint. This peak, ADX, even though it made a lower high, it made a nice strong move well above the 30 level with MACD confirming. So both of these are pullbacks that are tradable. Now, based on the way they pulled back, they might have been harder to play. But you had two pretty good opportunities. And again, you can kind of see this 18 and 40 moving up at a decent rate. Now, if you notice, we had this move. Now we made another new high here, and then we start to pull back. But this time, we didn't have the confirmation here or here. You see how this didn't get above 30? It actually kind of failed just above the 25 level. Not a lot of volume associated with this move, where we had really good volume back in here. So now, all of a sudden, on this new high, as this is starting to pull back from this high, I'm not really all that interested in this anymore. So, you know, you look at it and you're trying to identify the parallel line nature of the 18 and the 40. You're looking for the confirmation on the MACD and ADX. If you can't find it, then you don't really have a tradable trend anymore on that time frame. Now, here's where it gets interesting. If I'm looking at this chart, if I'm going through and looking at this chart right now, if I were to, going through a list of names, the what would hit me the most is this right here. That was the tradable trend. The last real tradable move was divergence on these time frames, telling you that there was a pullback coming. And then we had the 18 cross down below the 40, both lines declining at about the same rate. We had confirmation on a MACD basis, confirmation on an ADX basis, and we had this nice little pinch play rally back to the 18. I mean, that was a quality setup on that time frame. Now, you know, the other thing that I think you could look at is saying, okay, look, we have a break of a trend line, and it's essentially a 1, 2, 3 setup as well, with the pinch play as the trigger, where the 3 would be down here. But as I've said in multiple videos, if I get a setup where I've got the 1 and then the 2 is the test, and I have the setup with ADX and MACD, I'm not waiting for the 3. I'm going in on the 2. Now, how do you go in on the 2? Well, what I would do is go down another time frame. So I'm going to come down here, and I'm just going to change this 10-minute chart to this period here on this rally. That's what this rally was right up here. So now what I want to do on the 10-minute chart is draw in my trend line. So now I get a break of this trend line. So remember, this was the 2. So let's just make sure you can see this. This here was the 2. And that is this rally right here. So we're getting this rally to the upside, and that's the 2 on the higher time frame in this instance. This is the lower time frame. Now we're getting a break of a trend line, which is the 1, and we get a subsequent rally, which is the 2. Let's zoom in on this. So now we get a break of the trend line and a rally up, and notice how we get a little pinch here develop with 2 higher lows. Now remember, I'm looking for an entry on the higher time frame because I know that trade is setting up. Now, as this is moving up, I think this bar could be considered a trigger. Now, I know in my book I said put a stop right above this high, and you can do that, and in this case you would not have been stopped out. But what I typically do in real life trading, and part of the reason why I did that in the book is because I want you to use that as an exercise. The 2 time frame trading play is a great exercise in teaching you how to identify a trade in multiple time frames, implement it, and keep the risk low, and then play for a quick target. There's nothing wrong with doing that. You can do that, and in this case, you would have gone and hit a target very quickly. But what I want you to think about when you're putting these trades on and realizing that you might have a lot more room to the downside, that you could actually give it a little bit more room. Now, I have also said that I don't like using the moving averages. I don't really want to use the 18 because the 18, it's a moving line, number one. I haven't found the moving averages to be all that helpful as a stop level. And actually, when I've used the 18, I usually give it room above. I'll usually figure out an ATR level, maybe like half of an ATR, and put it above that line if I'm going to use it. But the thing I really like to do is go back in time and either find a prior peak, which in this case is really far away from my entry. If I'm doing it here, that is really far away, going all the way up to this peak. So what I like to do is find a bad bar. Look for a bad, on a short side, on a short trade, I'm looking for a bad bar. On an up trade, I'm looking for a good bar. And then I want to put the stop above that bar. So in this case, I've got this big red bar and you get a rally up and I'm going to go here. So I'm saving myself, you know, a decent amount of room. I don't have to give it that much space. That's a lot of space, giving it up above that high. The other thing you could do on a big bar like this is figure out the midpoint of this bar and then go slightly above it. So that is another option. It's a more aggressive option. The safer play is to go above the last big ugly bar that you have. And if you notice, that's giving you room above the 18 as well. So this is something I think I want you to think about because keep in mind, when you're doing this trade off of a 10-minute chart, you're really trying to get in on the hourly setup. Okay, this is a setup on the hourly using the 10-minute as a trigger. Now, this 10-minute is getting us in on something that is really going to improve our timing. And it's also going to keep us from being in something for too long. It's also going to prevent us from just shorting this and then having it trickle sideways or upward, because we're waiting for this trend to start to kick in gear back to the downside. So it's going to be more timely from that standpoint. So, but what I don't want you to do is get into a situation where you're putting this trade on this time frame. It goes up by one little tiny little bar on a 10-minute chart and takes you out. And on this chart, it doesn't look like anything happened. And then all of a sudden it just goes right back down. So, you know, you want to be careful about placing your stops. And that's why I like to use big bars. On the buy side, it's green bars, and on the sell side, it's red bars. Stay above those last big red bars on a short play and stay below the big green bars, the last big green bar on a long play. And again, if it's a big bar, you can use the midpoint of that bar. I wouldn't use the midpoint in this situation because that is below the 18. Do you see how if I use the midpoint, I'd be putting a stop below the 18. So it doesn't make sense to me. I would use the high of that bar. These are the types of things I think you want to think about so that you can put a trade on and have the confidence to see it through. One of the things that happened to me early on was I would put a trade on that was actually a really, really well thought out trade like this, but I'd have such a tight stop, not a tight stop, but I guess it would be called a tight stop. And anytime a stock started to move at all against me, I just sort of assumed that that stop was going to get hit and I would pull the plug on the trade. I wouldn't give it to the stop because I was so nervous that I thought the stop was going to be hit. And I think that had to do with having too tight of a stop placement. So the moment I started giving it more room, instead of placing the stop right above these highs, I moved it above a big red bar like this. All of a sudden, I had so much more confidence in the trade. And one bad bar against me didn't cause me to panic out, because you have to see a trade through. I mean, there's no way of knowing whether you're a good trader unless you see your trades through based on your plan. If you're jumping in and out based on how you feel during the trade, based on emotion, you have absolutely no chance of being successful, in my opinion. So just see the trade, plan it out in advance, use a stop that makes sense so that you don't get stopped out or at least panic out on any kind of adverse move on a small move against you. Hope this makes sense. Go ahead and post any questions or comments, and see you next time.